What's up, guys? So I just got finished up my trading session for the day, and today I took a reversal trading strategy, meaning we're waiting for the market to come down to a certain level that I had marked before the market even opened and looking for longs there and trading it back up to the range. So again, this is a very powerful reversal strategy because I knew that there's a very high chance that price would be defended at this level, and I want to walk you guys through exactly how I got these levels and the exact trade I took. So hopefully you guys can learn a thing or two from this video. So with that being said, let's dive straight into the trade recap. All right, guys, as you can see, I ended up making around $1,500 in total P&L from the one trade I took today. To be fully transparent, this week has been a little tough for me. Monday and Tuesday, I don't think the market was that hard to trade. We had a good read on the market. I just kept making dumb mistakes, or I would get stopped out by a few points due to having, a bad stop loss, and then it would rip up in my favor. So yeah, Monday and Tuesday were a little rough for me. And then Wednesday, I made a little bit of money. And then today we got finally a nice clean day, one trade, and it was a winner. So anyways, like I said, I took a reversal trading strategy. Now, depending on what time frame, some can argue, Chad, this is just a pullback, right? But if you trade on a 1 minute time frame or even a 5 minute time frame, you can see that the market went straight down, right? We opened up, we had a huge run up overnight and yesterday, right? So if you look on a bigger time frame, this is a pullback in the broad scheme of things, right? We can also see, there's a couple different support levels, right? We had like these pre-market lows, we had yesterday's highs, right? Market tried to reverse there a little bit, but then ended up breaking down even more right here, right? And again, we had a little bit of support right here yesterday, but how do I know this was the actual place, right? Why was this the actual level I was waiting on? Basically sitting through this chop, waiting all day to get to this specific level. So I'm going to be showing you how I got this level in this video. If you guys don't know, I do look at the QQQ levels and I trade NASDAQ futures. So what I do is I use a price converter. That's why these are all labeled. So this was 603 on QQQ. So if you guys don't know how to do that, there's a free indicator called QQQ to NQ. And you can basically just go to the settings and put in the QQQ levels and it'll automatically show up where it would be on the NQ chart. If you guys don't know, QQQ and NQ trade together, right? So anyways, now how do we actually know this 603? So as you can see, this trade was at around 11 Eastern time. So one of the main things I look at is the gamma in the options market, seeing where price is likely to get defended, okay? Seeing where that area is. So I use this software right here. There's a link below if you guys want to check it out. But anyways, the coolest thing about this website is they do have a replay mode. So if I go back to today, right, and we go to around when I took the trade at, 11 Eastern time? Doesn't really matter. Most of it looked the same today, but as you can see, one thing we want to pay attention to is this delta hedging on the left here, right? And what this is going to show is this going to show key levels in the market. Okay, so if we pull this up, right, this is basically where liquidity providers have to hedge their positions. Okay, this is the big money, the big institutions, the big banks. This is the interest, right? So as you can see, market opened up at around, 607 on QQ. We initially fell straight down, right, into 604. Now, if we look at 604 here, as you can see, we have a very small positive bar. See how the bar is going up instead of negative. Now, this bar could hold, but the area where it's most likely to be defended is inside the first negative area, okay? So this first negative bar is more likely to be defended because market makers, for one, they want a good deal on the price, right? Because they're hedging positions. They want to make as much money on their hedging as possible. And number two, they don't want the market to go negative. Okay, and you can see this bar behind it was the biggest interest in the negative, and this was supporting it. So essentially, if price pulls down into this area, it's likely to be defended here. Now, if we end up breaking 602 and there's just a lot of sellers in the market and they're overtaking liquidity providers, what's going to happen is we're going to break this level, and then liquidity providers have to switch all their hedges. Okay, so if we break this, they're going to switch to selling. And if you think about it, right, if a lot of people are selling, liquidity providers have to buy those contracts that people are selling because they're providing liquidity to traders, to investors. And if they have a bunch of contracts they bought, they have to hedge because they have to be neutral in the market, right? So they're going to have to flip all their positions and the market's going to melt down to 600, and they don't want to do that, right? So they're going to try to defend these levels as much as they can, and this is the most common setup I like to take. It's either a pullback or a full reversal depending on the time frame you actually are looking at the candlestick charts on, right? But the whole point of this is candles are just going to show what price did. It's going to show what price did yesterday. Yes, we have some support here. We have some support here. Where is the clear support, right? This is why I use the gamma, the delta hedging levels, because you're more likely to predict the flows of the market, right? Okay, if we come down to this area, this is the first negative bar. We have a big bar behind it. This is likely to get supported, right? I want to get long here. This will be my level. Okay, 603. Okay, this also matches up with some support from yesterday, right? And then you can kind of look at support from there. But again, I mainly just look at this, and that's really all you need to create your levels. Now, anyways, as you can see, we chopped here for a while, finally got the pullback exactly to 603, right? And then we bounce off of it. I didn't get confirmation to enter this trade until 604, so I did get a late entry, which made my risk reward a lot smaller. So that was a little unfortunate, but the target for this trade was 605. So that's what I had to work with. As you can see, we got exactly to 605, and then we're chopping around in this range again, right? This is not a coincidence. This is because we're looking at the actual things that move the market, right? The reason why my target was 605 because this was a huge gamma wall, meaning when price gets up here, market makers don't have to do as much, right? When we're in big positive gamma, the liquidity providers, they don't have to hedge as much. They're pretty much more neutral in the market. We could get to 606, right? That's like the max of the day. And then as you can see, it completely declines from here. So again, this is why 605 was pretty much the safest target, but we could still get to 606 by the end of the today, because that is the biggest interest level. From there, we're going to consolidate. So that's the first thing I look at to confirm these levels. I also look at the institutional flow, which is also known as delta in the Greeks. Basically looking, okay, this matches up 603. We have the first negative bar right here, 602. So this is just like, and you can also compare it. Like, as you can see, we have more buying interest than selling interest. These bars go up bigger than these bars down here. So more likely to get defended. Once again, that's another confirmation on those levels. And then we also have the time pressure, which is the decay of the options, right? This is the charm. So this lined up with those levels as well. Anyways, guys, that was my trade for the day. That's one of the most common setups I trade. It's either going to be defined as a reversal strategy or a pullback strategy. It depends what time frame you trade on. If you're a 1 minute time frame trader, you're going long way down here. You're looking at this like, okay, we made a lower low, higher low. We have a downtrend. We have a clear downtrend. If you use EMAs, they're all going to be pointing down, right? But obviously, if you're zooming out and you can see, okay, this is a pullback in the grand scheme of things, that can also give you some more confidence and be more comfortable with entering way down, even though we're against the 1 minute trend, right? Also, guys, before you go, I want to let you know that I'm going to be hosting a free live webinar next week on October 9th. I was originally supposed to do this last week, but something came up and I had to reschedule it. So be sure to tune in next week. I promise I won't reschedule again. It will be the 9th. We're going to be going in depth on how to read and find institutional levels and hidden forces that makes price move, which is basically everything I kind of covered real quick in this video. So this is going to be an in-depth training. I'm going to be showing you all the setups that I've created that goes along with these Greeks and all that good stuff. So there's going to be a ton of value in here. If you guys want to learn more about this and how to see what makes the market actually move, you're going to want to tune into this training. So anyways, guys, I hope to see you there next week. If you guys have any questions for me, let me know. And I'll see you guys tomorrow morning inside our Discord group for another trading session. So anyways, guys, hope you have a good rest of your day. And I'll see you tomorrow morning for the last day of the trading week.